Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for BROADCOM Incorporated, stock ticker AVGO. Here we can see that the stock is starting to show a bit of a recovery after some prior losses, and we're starting to form a base at somewhat lower levels. So we will need to kind of drill in here a bit to take note of where certain support and resistance levels currently rest, and this will give us an idea of where we are likely to start trading here going forward. So as we can see here, we've got a bit of an uptrend here that's starting to develop. The prior price lows are now coming in. This would be a low just below 154. So 153.90 would be the current price low for this sort of trend movement here. And we can see that, the price pattern here ultimately really is kind of an ascending triangle that has sort of resolved itself here to the top side. We do have a very strong bullish candle here. So we can see if we kind of drill in here, this is a very strong, decisive move to the top side. And we really did break the resistance levels that we have been watching just below 163. So this would have come in at 162.50 roughly. So currently what we're dealing with here, is a price gapping formation, which did occur previously. This was a fairly significant move to the downside, at least on a short-term basis. We can see that prices dropped from just above 168 all the way down to just above 162. So there was a fairly decisive price move here. And now that we have broken through resistance levels, our overall expectation is that we will start to see this gap filled. There are a few reasons why we expect this to be the case. So not only did we sort of break through this ascending triangle pattern here to the top side, which is the direction that you want to see. You do want to see an ascending triangle pattern resolve to the top side, because if it breaks to the downside, that completely invalidates the pattern. So we did see a break of this resistance zone, which does signify a break of that ascending triangle pattern. And then in addition to that, we have been able to maintain this uptrend line here, which began from these lows just below 154. And then in addition to that, we're now starting to break through our exponential moving average cluster. So these are significant price moves, and they did happen before we were able to reach the 618 retracement of this dominant price move. If we remember, we're kind of defining this dominant price move as going back to the lows from June 3rd, which posted at 130.20, just above there. 130.22 is the exact number. And then this trend wave here extends to the recent highs, which posted just above 185 at 185.13. This would have occurred during the June 18 trading session. So currently we are caught in this sort of broader bullish structure here, but there are still some concerns that need to be watched to the downside. In particular, we did break this critical support level, which was found at 156.70 roughly. This is important because this does match up fairly well with the 50% retracement of this dominant trend move. And then in addition to that, we do also have a much larger price gap that is seen on a longer term time frame here. So, while we could continue to see these gains continue, we really do need to see a break of certain resistance levels in order to consider this to be a valid price move to the top side. Currently, the support zone that was in place previously came in at just above 166. We can call this 166.80. And this is a level that would now be expected to work as resistance here going forward. There is a fair amount of resistance in this area here. So if prices are able to decisively break through here, that would be a positive signal. And it would suggest that we could continue to see some follow through here to the top side. All of that said, we do need to kind of watch this descending downtrend line here. The downtrend line, which began at these prior highs from June 18 at 185.13. This is still a structure that is in place. This is sort of a more dominant, longer term price structure that is actually forming a descending triangle pattern. And then in addition to that, we did have this recent break here to the downside, which does kind of put this recent rally in precarious territory. So if you're trading this from a shorter term perspective, this does look like we can continue to see more gains here. At least into this 166.80 area, but we really do need to see a fairly decisive break here to the top side in order to start to believe that this rally is likely to continue. If we look at the indicator readings, we can see that there's a lot of bullish momentum here to the down on the bottom of this chart. On the bottom of the relative strength index reading, we have this upward sloping trend line here. And this does signify positive momentum in the stock from a longer term basis. But all of that said, we do have a bit of a shorter term trend that does seem to be developing here, which could continue to put pressure on the downside. So, there are a few different conflicting factors going on here. In order for me to be convinced that this is a true break with some legs that's likely to sustain itself, I really need to see an upside break of this 166.60 area. Then I would be a little bit more optimistic about this, about long positions in this trade, because we are going to need to break this descending triangle here relatively soon. And that will require this break of 166.80. To the downside, people that are looking to establish long positions in the stock can wait for more of a downside retracement back toward 154. We can call this 153.90. And then that marks a fairly good area to start buying in. Although we do want to see how this, these broader price patterns resolve themselves, because, if we were to see a strong failure here at 166.80, that could put these lower support zones below 154 back in focus, and then they could be at risk of breaking to the downside depending on the type of momentum that we see in the relative strength index readings. So here's the current market outlook for BROADCOM Incorporated, stock ticker AVGO.